Nvidia's plan to issue $20 billion in bonds has caught investors' attention. Most people's first reaction is simple: Nvidia needs money. But Nvidia isn't short on cash. The AI boom has helped the company generate enormous profits over the past few years. So why would one of the market's most profitable companies suddenly raise $20 billion? I think there's a bigger signal behind this move. Hey everyone, I'm Nolan. Over the past 2 years, AI discussions have focused on better models, more powerful chips, and who was leading the AI race. But recently, more tech giants have been expanding investments, building data centers, and increasing spending. That got me thinking, maybe the AI story is changing, and Nvidia's bond offering may be showing us the beginning of that shift. First, I think the most interesting part of this story isn't the size of the bond deal. It's why Nvidia wants the money in the first place. Normally, there's nothing unusual about a company borrowing money. Some companies borrow to expand their business. Some borrow to build new facilities. Others borrow because they need help funding day-to-day operations. But Nvidia doesn't really fit into any of those categories. Over the last few years, demand for AI has exploded, and Nvidia has made an incredible amount of money. Its revenue growth and profitability have been stronger than most companies in the market. In other words, if the goal were simply to keep the business running, Nvidia doesn't look like a company that desperately needs financing. So when a company like this suddenly decides to raise $20 billion, I don't think the most important question is how much money it's borrowing. The real question is what opportunity Nvidia sees that makes it worth preparing this much capital ahead of time. Because when large companies make moves like this, they're often reacting to what they expect to happen over the next several years, not what's happening today. And that's what makes this story interesting. If Nvidia isn't short on cash, this bond offering probably isn't about today's needs. Big companies often raise money because they're preparing for the future. So I'm less interested in how much Nvidia is borrowing. What interests me more is what trend Nvidia sees that makes this move necessary. And to find that answer, we need to look beyond Nvidia and see what's happening across the AI industry. For the last few years, whenever people talked about AI, the spotlight was usually on the models. From ChatGPT to Claude to Gemini, every new release sparked conversations about whether the models were getting smarter and what new things they could do. Then, as the AI boom gained momentum, investors shifted their attention toward chips, because building better AI models requires more computing power. As a result, many people started to think that AI growth was mainly about models and chips. But if you zoom out a little, you'll notice that models and chips are really just the most visible parts of the system. Think about it this way. When you open ChatGPT and type in a question, it feels like a simple conversation. A few seconds later, you get an answer. But behind that interaction, thousands of servers may be running at the same time. Those servers need data centers. Those data centers need reliable electricity. They need high-speed networking. They need cooling systems that can keep everything running around the clock. And as more people use AI, all of that infrastructure has to keep expanding. So while most people see the models, the truly expensive part may be the infrastructure that makes those models possible. And I think this is exactly what many investors are missing. While people are still focused on models and chips, more money is already flowing into data centers, power systems, and computing infrastructure. If AI needs more infrastructure to keep growing, then the question may no longer be who has the best model. It may be who is willing to invest the most to build it. And that leads to another question. Who's going to pay for all of it? And that's exactly why Nvidia's bond offering matters. If the future really does require more data centers, more servers, and more computing capacity, then somebody has to fund that expansion. So when Nvidia decides to raise $20 billion, I see it less as a financing event and more as a preparation for what's coming next. Management teams often see industry shifts before investors do. They're usually much closer to future demand trends. And if Nvidia believes AI infrastructure spending will continue to grow over the next several years, then preparing capital ahead of time makes a lot of sense. In that context, The most important thing about this bond offering isn't the financing itself. It's what the financing may be telling us about future demand. And from that perspective, Nvidia's bond offering starts to make more sense. If the industry needs more data centers, servers, and computing power in the years ahead, then raising capital now isn't hard to understand. So I don't think the real story is how much Nvidia is borrowing. I think it's what this move says about where the industry may be headed. And more importantly, Nvidia may not be the only company seeing that trend. Because if Nvidia were the only company making moves like this, we could probably dismiss it as a company-specific decision. But that's not what we're seeing. Over the last few years, major tech companies have been increasing their investments. Amazon continues to expand its data center footprint. Microsoft keeps increasing AI-related spending. Google is building more computing infrastructure. These companies operate very different businesses, but their capital spending seems to be moving in the same direction. They're all investing heavily in AI, and that's an important signal. Historically, when an entire industry starts investing at the same time, it usually reflects a shared belief about future demand. We saw it during the internet build-out. We saw it again during the cloud computing era. And today, we're seeing something very similar around AI, which suggests this may be bigger than any one company's strategy. It may be the beginning of a new investment cycle. If only one company were making these investments, it could just be management's opinion. But when multiple industry leaders are all moving in the same direction, it's worth paying attention, because that's often how larger trends begin to emerge. And what's even more interesting is that it's not just technology companies making this bet. The capital markets seem to be making the same bet as well. Many investors are focused on how much money Nvidia plans to raise. But I think a more important question is why investors are willing to lend that money in the first place. Large institutional investors don't usually focus only on short-term excitement. They're thinking about long-term returns. So when the market is willing to provide tens of billions of dollars for AI infrastructure, that tells us something. It suggests that a meaningful amount of capital is betting that AI demand will continue growing for years to come. Otherwise, those investments would be much harder to justify. In a way, this is also a vote of confidence from the capital markets on the long-term future of AI. Put it all together, and a bigger picture starts to emerge. Many people see Nvidia borrowing money. I see a sign that AI's most expensive phase may still lie ahead. When a cash-rich company starts raising billions, it may signal something bigger than its own plans. That's why I think the market may be underestimating AI's future capital needs. What do you think? Let me know below. I'm Nolan. See you next time.